Good morning, traders. Welcome to Friday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before jumping in, we always need to check the news so that we know what's going on and when, so that we're not taken by surprise by anything. So taking a look at the news announcements for today, starting off the day with some early non-farm payrolls at 8:30, forecasted at 182,000. That's going to be the big one. A lot of focus is going to be on that non-farm payrolls. Along with the non-farm payrolls, which I don't remember if I said it or not, but the forecast is 182,000. We also have the unemployment rate, which is forecasted at 6.3%. That's the same as the previous. So that will be the big zone of interest. As we go in a little bit later this afternoon, well, before we get to the afternoon, there is the U.S. Baker Hughes total oil rig count and all that fun stuff at 1,300. Anything dealing with oil right now is going to be interesting. But going into the afternoon session at 1,400, we have the U.S. federal budget. Forecast is negative, well, the previous is negative 430 billion. We'll see what it comes out as today. And then we move into our typical Friday stuff with the CFTC speculative net positions, all the basics. So the big news that we've got going on for today is going to be at 8:30. We've got some popping up at 1,400, and then we go into the weekend. So with that out of the way, now we can jump into some charts for today. Today being 3/5 of 2021. First up, we've got the NASDAQ, and overall, nice descending wedge to the downside, kind of reminiscent of a bit of an avalanche wedge to the downside as well. Very steep angle, although it didn't go very far. We did have a lot of divergence on the base once it started breaking out of this wedge, and realistically, it looks like they just ran straight into a brick wall. There's a huge amount of support that's coming in down at these lows, and with the divergence at the lows and the fact that it stopped that down move dead in its tracks, that's likely going to be a zone of interest for quite a while, hovering around that 12,307 to 310 area. While the market is continuing to work its way lower, we also do have a continuation L1 short, which is at around like 12,470s, trying to continue the market back down towards the lows. So sellers are still trying, even with the divergences and everything else going on. They still have a shot. They haven't broken higher. There's been no invalidation of the sell side with higher highs, higher lows. Nothing like that. So with this big continuation of the downside, we're either going to start picking up speed, which is what we have not seen so far. Typically, the last times they've tried getting speed on these big moves down, they tend to be pretty short-lived. So I'm not expecting a whole lot on this move down, to be honest. But if it does want to stick and keep going, that could be the start of a new trend down. And then over on the S&P with a little pennant/wedge formation going on here. We do also have some divergences off the lows, although not as extreme. The market is finding some balance around these 3750s. There's a lot of interest here. And on that big dive to the downside, just looking at the dive to the downside, not looking at anything else that happened afterward, will give us a big clue in terms of what was going on. This major drive down found the major volume node right in the middle of the drop, right at 3770 around settlement. There wasn't a whole lot of volume underneath. I mean, there was still a lot of volume, but the majority of the volume came in at 3770. So when the market came back up, rejected it, came back up, rejected it. So you can see, as long as we're staying below this, it's bearish. If we start going above it, then we're probably going to go up to the bears L2 at around 3788. But so long as we're staying below that volume POC, we're likely going to keep trying to grind lower. And then switching gears over to gold with a descending wedge going on here as well, but it's widened out a little bit. Gold has been a bit of a mixed bag where, you know, it looked like it was getting a little bit weaker. Maybe the wedge lows are on this nearer bottom. And if we draw that up, you can see they did kind of use it a little bit, but they used it mostly as resistance than anything else before finally breaking down and actually getting a physical test of the channel/wedge lows. So with that test on the wedge lows, that does complete our third drive lower and our third drive lower on 3 drives higher on MACD divergence. So we are getting that continuation back to the upside that would be suggesting that the low is nearer than anything else. The big thing that we need to see here is a break back above the previous swings. We've got to get that trend continuation reversal stuff back to the other side. Without that, the buyers are going to have a really hard time. We still have falling resistance. Sellers are going to be selling the top of the wedge, top of the channel, 1700 resistance right at settlement. There's a lot of stuff going on here. So as long as the sellers are holding it down, we'll stay low. But if they start cracking back above 1700s and start rallying back to the upside, well, look out above. Then over on crude oil with a big continuation to the upside after failing through the lows of the channel. That appears to be now in hindsight all accumulation. That's all that was underneath that low before going screaming all the way back up. Well, they broke above 63 and broke above 64 and are now trying to break above 65. This thing is putting on some serious movement to the upside. The big thing that we do have here is some swing gapping to the upside. We have a previous swing high here. The closest the market came was right here. That leaves this distance as a gap. So if we measure from the bottom of that gap to the closest point that they were able to complete, that gives us a primary objective, just hovering right around 65. I mean, it's right inside of there. If we widen this out just a little bit further to the major swing, then that does allow potential all the way back up above 66. Realistically, we're climbing into the top of the channel. We're hitting some major objectives from a percentage standpoint, if I can say that properly. We also have an overshoot on the lows of the channel, which was accumulated, likely targets at the top of the channel and higher. So being a buyer way up here, that just doesn't seem like a very good idea. I think a lot of buyers are going to be waiting for pullbacks. And then over on the euro with a continuation to the downside, it's not quite at the channel lows, but it is getting very close. We do have the overshot on the bottom. That would be an L2 overshot, meaning that it extended an L2 deviation below the previous lows. It's not typically the way that I like measuring those, but in order to give us something to work with this structural breakdown, without having to load up 10 years of data, that's about all we've got to work with. We've got the channel lows, we've got the overshot. Everything is compiling very aggressively here. And the big obvious thing is 1.2. You remember 1.2 was right there? Well, it was right there. I think it's fairly safe to say that we've broken through that. And this is more than an accumulation breakdown. An accumulation breakdown usually is going to be short-lived. It's not going to stick around very long. This is some pretty sustainable movement. So the fact that that is broken through 1.2, it wouldn't be a surprise at all to see it come back, use it as resistance, and then continue the rejection back to the downside. Over on Bitcoin, we've got a descending wedge right down into L4. L4 is also the test point of the spike in channel. We had that initial spike up, and then they began that channeling process to the highs. Although it wasn't the prettiest looking thing in the world, we are at the beginning point of that. That's right around there. Typically, that's where a lot of buying pressure comes back in to try to defend. In this case, buying pressure because the market's moving lower. But either way, support is expected down in these L4s to L5s. This is a very early sign of potential reversal on Bitcoin, where they just recently attempted to get above the highs. And to say that move above the highs was a failure would be a complete understatement. So buying way up here, just doesn't make any sense. The majority of buyers are going to be waiting for deeper prices down here, around the 45,000s, 46,000s, something that's much cheaper. That way it reduces their risk so that they don't have to risk as much, but the reward back to the highs is incredibly good from a risk-reward standpoint. And then finally, over on Ethereum with a very similar situation, we do have a nice continuation breakdown. Buyers are going to, buyers are going to be looking for an L5 on the downside. And realistically, with this last attempt higher, we were just talking about this on Bitcoin, how the breakout was pretty garbage. On Ethereum, they also had a very nice attempt at a breakout, but after a little while, that ended up failing back down and then used that level as resistance. That's a pretty big clue. When you see support turning into resistance, it's a fairly big, obvious clue that that move is failing. So with that move failing and breaking back down, we're starting to challenge these previous lows. This is where a lot of stops will be, right? If buyers are buying down here, buying the pullback, buying the dip, whatever, their stops are going to be migrating along with these swings. We've got the swing low, swing low, swing low, swing low. Probably got tapped out, a lot of them. When it rallied back up to the highs, a lot of traders who maybe didn't move their stops there will move their stops there now. Industry money, heavy money who's looking to accumulate, they know that. They're not stupid, right? What better place for a stop than below a major swing? Well, if I've got a lot of orders to fill, right? If I've, in this case, a lot of coins that I need to buy, and I need to do it in a way that doesn't affect the market, I can either do it OTC style, which is typically the approach that most market makers in large funds will take, as to not disrupt the market. But the other side of things is to do it into stop run areas, right? If there's a lot of orders coming in, a huge amount of orders, and it's at a low, basically everyone's just going to assume it stops. Well, if this were a stop run and this were an actual breakdown, what happened? That got accumulated. It got absorbed, at least initially. Now, if it does break down again, then it'll probably slide a little bit further. These absorption buyers are trying to hold this off and get it to rotate higher, which so far it hasn't done. But if it does start rotating higher, then we've got an overshot on the channel, which is looking for completion back to the top. Alrighty, well, that's going to do it for today. Like we always say, stay safe out there, keep those stops in play, and let the winners run. We are going into the weekend, so I hope you have a fantastic weekend. I hope you've had a fantastic trading week prior going into the weekend. And yeah, we'll see everyone back on Monday, all right? Have a good one. We'll talk to y'all later. Thanks.